This episode of the Wolf of All Streets podcast is sponsored by Horizen and Whalefin. Please stay tuned for more information on them later in the episode. What's up, everybody? I'm Scott Melker, and this is the Wolf of All Streets podcast, where 2 times every week I talk to your favorite personalities from the worlds of Bitcoin, trading, finance, music, art, sports, politics, basically anyone with a good story to tell. Now, there are a lot of huge projects that have been massively successful in the crypto space, but people forget that a lot of those had to start somewhere, and they all started with coin launches on platforms like CoinList. I'm talking about Solana, Filecoin, Algorand, some of the biggest names in the space. Well, today I have their CEO, Jenkin, here to talk about how these coins are launched, how they choose their coins, but also to talk about a recent survey that they did talking about the biggest trends coming in 2022. Graham, it's an honor to have you here. Thank you so much for joining.
Thanks for having me, Scott. Great to be here.
So for those who don't know, the quick background, what is CoinList and why did you start it?
Yeah, CoinList is a premier token sales platform, as you mentioned. So we go out there and try to find some of the best new emerging teams in crypto and try to help them be successful, whether it's helping them raise capital, build their communities. There's a ton of different ways that we try to help them be successful. And as you mentioned, we've helped teams going back to Filecoin in 2017. That's really where we got our start. A bunch of other teams, including, as you said, Solana, Algorand, more recently, ImmutableX, Amina in the last 12 months. And there's a pipeline of many more on their way. So, and that's really what we're passionate about. We're passionate about trying to accelerate the advancement of this technology. And the best way that we know how to do that is by going out into the ecosystem, talking with founders, talking with teams, trying to find the best teams that are really trying to push the boundaries of what this technology can do, and then giving them all the tools to be successful. And so in terms of how we got into the space, really, in a lot of ways, we got into the space because we saw a lot of garbage in crypto, especially in the 2016, 2017 timeframe. We were all at a company called AngelList, which I'm not sure how familiar you are with AngelList, but
very.
Okay, yeah. So yeah, AngelList was started by Babak Nivi and Naval Ravikant in 2010. It's really a platform for startups. It's a startup for startups. And I could tell you the full story. Sure. I met Naval back in 2010 when I was kind of going through the process of exiting Google. I'd been at Google for a while, mainly working in the ad space there. And, just like every other clown in Silicon Valley, I had my own startup ideas, had my pitch deck, and was out there just trying to get some angel investor support for what I was doing. And, one of the investors I met through that process was Naval. And Naval, I don't know if you know Naval well, but Naval's a super nice guy, really generous guy. He's also very direct. Doesn't want to waste any time. So, we talked a bit about some of my ideas, and he was just like, "Look, why are you doing any of this stupid stuff? You should just come and join me at AngelList." And yes, I got plugged into AngelList pretty early on, a little bit after they found or helped the Uber team connect with their angel investors way back in 2010, 2011. And just fell in love with what the Angels team was doing, what their mission was, really trying to accelerate the advancement of technology more broadly. And we did a bunch of stuff in AngelList from a regulatory standpoint as well, helped introduce crowdfunding in the US via the Jobs Act. And then in 2015, 2016, 2017, started to see what was going on in crypto with ICOs. And we got really excited about that as a technology, not just from the standpoint of crypto itself, but also from the perspective of the ICO as a mechanic to help any new emerging technology company raise capital. And but there was a massive problem, obviously, which is that, and still is in a lot of ways, is that there are a lot of scam projects out there. And so what we wanted to try to do was keep a high bar, find high quality teams. And also we came up with a regulatory framework that sort of met some of the requirements from a compliance perspective, help these teams raise capital, do it compliantly, try to keep the regulators somewhat happy, and also protect investors along the way. So So that's essentially what we did with the Filecoin ICO. Helped those guys raise over 200 million with that ICO using the framework we developed, using the compliance infrastructure we built at AngelList. And because that was so successful, we got a massive amount of inbound interest from other teams who wanted to use the same framework. And because we got so much inbound interest, we decided to spin this thing out as its own company. And so that was in August 2017. So that's how we got started. Long story.
Yeah, long story, but relevant. And I love how you brushed over Google. I was at Google for a while when, in fact, you basically redesigned all of Google AdWords, which is like the most profitable platform on the planet, right? Online.
Yeah, there's a big team involved in that, obviously. But yeah, I was definitely kind of leading the redesign efforts on AdWords, and awesome people at Google, and great experience working there.
I actually grew up with one of the first people there, Craig Silverstein. Was a very impressive guy. And speaking of people, I met Naval. You said, do you know him? I don't, but I met him at Michael Saylor's house about 2 months ago and was legitimately starstruck for one of the first times in my life. I don't know why. I DJ'd and like did music and stuff for 20 years. I met everyone. I was actually almost legitimately starstruck by Naval. But you sort of touched on this before. And I was kind of laughed. You said 2016, 2017, there was so much garbage in the crypto space. Well, if you thought that was a garbage heap, what do you think of 2022? We have like 20,000 projects, right? I mean, there's got to be 20,000 coins now. How do you sift through that? I know your mission is to find the good teams, find the good projects, the one that will be impactful. But how much trash do you have to sift through to find those good projects?
Yeah, a lot. I mean, it is. Right now we're at the point where it's very difficult for us to sift through the inbound, just because we are literally talking about thousands of projects that are reaching out to us to list on CoinList or run their offering on CoinList, and so yeah, now it's there's a couple of different techniques now that we're using to source deals. A lot of it, frankly, is just coming through our investor network. We've got a great community, not just investors on the platform, but investors in CoinList, and they refer deals to us, and that ends up kind of forming the kind of core of the set of projects that we're looking at. We also run a seed, what we call CoinList Seed, is a virtual demo day. We do that 3 to 4 times a year, and we're just about to do one next month. And, that's essentially another process where companies apply to us. We take a look at a number of different dimensions to try to evaluate them, and then come up with 8 to 10 projects that then pitch a group of folks from our investor community. And that ends up being another source of projects. But yeah, it's tough. And the volume it's definitely gone crazy. I think the big difference between 2016, 2017, and now is that the quality of the teams that we're seeing on average is much higher. Like, we're seeing a lot of engineers, a lot of developers, a lot of entrepreneurs coming over from Web2, large kind of, the Googles, the Facebooks, etc. So a lot of those developers they must have got interested in blockchain in the last couple of years, and have just with all the capital moving into the space, have decided to jump in and try their hand. In a lot of ways, it's almost riskier for them to stay at large big tech, just given all the opportunity that exists in the blockchain world. So the quality of teams has increased dramatically, and that's actually making it a lot more difficult to filter through the teams and decide who we end up working with.
Which is probably why we see so many billions of dollars coming into venture capital in crypto now. Every day, it seems like there's another $1 billion fundraise, because there's so much quality material that needs to be funded. Another big difference, I would say, from 2017, in my estimation, is that projects don't raise $1 billion that they don't need anymore, right? At that point, it was just gratuitous. You just literally took as much as would come, and a startup that might have needed $5 million would have $1 billion to operate, right? And then they lost it, of course. But.
Yeah, right. Well, yeah, the capital that's being raised right now is it's not at the $1 billion level, but it's definitely large. And I think in a lot of ways, it's mainly because a lot of these projects, this is almost like, especially when they get to the public sale stage, that's effectively their last fundraise, or potentially their last fundraise. And so the funds they raise at that stage, at that point at which they're launching mainnet, those funds are meant to last potentially indefinitely. And so it's that does kind of force a lot of pressure on these teams, protocol teams, to raise large amounts of capital. But yeah, now we're definitely seeing much more reasonable plans for how that capital is being deployed, and it is being deployed. So yeah, a little bit different to the 2017 rush.
Right. Just my understanding, there's effectively two sides to what you do. Obviously, you've described everything from a project perspective, how you fund them, how you help them, how you facilitate them. Then there's, of course, the launch, which is what's accessible to the public. So let's talk about how somebody can actually invest in these projects early, which is a huge problem for people, right? They want to get in and often can't, based on nationality or other qualifications, KYC, accreditation, all of these things. So how does somebody actually invest early in a project on CoinList?
Good question. It's there is incredible demand right now, and we have a global audience. When we got started in 2017, our main focus was on U.S. accredited investors, and so we ran for the Filecoin sale as an example. That was run as a Reg D 506C sale, which means that we effectively needed to collect accredited investor status evidence from all those that participated. And, again, for us, what we were really trying to do is establish from a compliance perspective, really try to build trust within the investor community that this is a platform that's trying to do things the right way. It's a clean, well-lit place for participating in token sales. And that was 2017, very much a big focus on compliance, US accredited investors, et cetera. And what's happened over time is that because of a lot of the regulatory uncertainty in the US, a lot of the teams really started in about 2019. A lot of the teams that we work with have decided to block US resident participation, and that extends into Canada. China, for I think since 2017, the Chinese government has banned investor participation in ICOs. So essentially, U.S., Canada, and China now are banned from participating in these sales, and so we definitely saw a massive drop off in U.S. Resident participation in 2019. We did see a very big increase in Cayman Island participation at that same time. So I'm not sure what that means. But there was definitely a big shift, right? So there's a big shift in participation, and frankly, I kind of feel like it's actually a net positive thing for these protocol teams, mainly because back then a lot of the focus was on raising large amounts of capital, and from maybe a couple hundred investors. And that focus has shifted pretty dramatically over time. Now by the time these teams come to us, what it is they're doing is they focus much more on engaging a large community of investors and I guess token sale participants. It's less about raising massive amounts of capital, because capital is freely available. Where if you're not able to raise capital, then people are like, there's got to be a problem here with you guys. So time they come to CoinList, the amounts of capital they're raising are smaller. They're really focused on trying to engage a large community of investors. And so what we've seen, certainly the last year, what we've seen happen is that when we run a sale on CoinList, we end up seeing 900,000 users show up in order to try to win an allocation. And the spots available on a per sale basis end up being in the 10 to 50,000 range. So you're going from 900,000, trying to squeeze that into 10,000. And so that makes the experience for a lot of folks that participate, it's pretty challenging. It's pretty disappointing. And, certainly for US, China, and Canada, it's disappointing because you can't participate in any of these deals. But even for folks who can participate, the chances of getting an allocation are pretty low. And so there's a couple of things that we've worked on to try to address that. Obviously, one thing is trying to negotiate with the teams to see if we can get larger allocations. That's kind of the obvious thing.
Let everyone in. Yeah.
Let more people in. You've got 900,000 folks. And you might as well, try to capture as many of those as you can. So that's one thing. But the other thing that we're doing is creating a better chance for those sale participants who have demonstrated the ability to contribute positively to protocol teams in the past. We're trying to give those folks a much better chance of getting access to these opportunities. And that's through a program that we call Karma. Karma is essentially, it looks like a loyalty program, but it's really more of like a quality score where we give you points based on your contributions to these projects. So if you're a developer, if you're a miner or validator, if you tend to stake, et cetera, if you've got those type of qualities that the protocol team's really looking for in their community, then we give you more Karma points. The higher Karma points you have, the greater the chance that you get into what we call the priority queue, which gives you much better access to these deals. It's a much smaller queue. And instead of being in a queue with 9,000 people, you in a queue with say 20 or 30,000 people. So the chances of getting in just much better. And so that really helps us drive high quality token holders into these communities. And so that's kind of, so if you do want to try to participate in these sales, it's worth, being a developer, running nodes, et cetera, staking, building up Karma points, and then you get a better chance of getting in.
Add value, right? I mean, value-added investors. It makes perfect sense that if you're going to choose between two people, you want one who's going to actively participate and obviously be sort of proselytized for the project and be a positive influence on the community.
What our hope is that we would like to work out a way to try to have others. We're talking to various teams about this. We'd like to have other teams leverage that system or try to develop their own system that's similar, mainly because, Vitalik talks about this from time to time, but, in a lot of these communities, the folks that have most of the leverage, if there's a governance event, like a voting event, you'll tend to see folks that hold a lot of coin be the ones that are really kind of holding sway in terms of how decisions are made. And I don't think that that's necessarily a terrible system, but it certainly cuts out folks that may be contributing a lot to these protocol teams, but who aren't necessarily crypto wealthy. And so if you're committing a lot of code, if you're really helping build a protocol from the ground up, and you, for whatever reason, don't hold a lot of coin, you're effectively kind of shut out of a lot of the governance associated with these protocols. And so a system like Karma starts to level that playing field. So if you hold a lot of coin, there's advantage to that. But if you're also just contributing a lot of code, if you're contributing a lot from the standpoint of being a miner or validator, that ends up giving you additional weighting and just kind of levels the playing field a little bit. So our hope is that other teams catch on to that and either develop their own system or use ours.
That sort of speaks to the core of the centralization versus decentralization sort of battle and ethos happening within these projects and communities anyway, right? You just described to some degree the challenges of a DAO, right?
For sure.
And so I think that it's interesting that you're seeing it at that level, because I think that those are going to be major hurdles for a lot of projects that are trying to be fully decentralized in the first place.
100%. And, we were talking earlier about some of Jack's comments recently. And, I think maybe he's pretty assertive about going after a specific set of crypto VCs. Or just VC funds. But I think, part of his argument, which I think is good, is that, a lot of these teams that want to try to be central or decentralized, actually, and obviously decentralization is a spectrum, and
I say it all the time.
People are at various points of decentralization, and when one or two VC firms hold massive chunks of token for that protocol, then it really just doesn't look like decentralization at all. And so I think that's definitely a problem. And there's certainly VCs out there that add a ton of value and are helpful, but I'm not necessarily the person to poo-poo on the VCs.
And Andreessen's about to raise 4.5 billion more. I think they're doing fine, right? If we're talking about who he's obviously going after. And I talk about that sliding scale of centralization to decentralization all the time. And I love that you said that, because it's not so black and white, and you can make improvements without going all the way. And I think what's largely missed in Jack's argument, and I agree with a lot of it, as you said, is that where the money comes from that funds the protocol is secondary to the effect that protocol has on people's lives in the end. Right? Like, I mean, you worked at Google, right? Google changed the lives of billions of people and the way that they find information. I don't really care who made money investing in Google earlier, because Google's improved my life.
No, totally. And, you know, I guess part of Jack's argument too is that, and there's a little bit of truth to this as well, is that the degree of utility that a lot of these projects have provided humankind, it's certainly nowhere near the level of like a Google or Amazon or what have you. But I think part of his argument is that, you know, a lot of these applications aren't actually doing anything for anybody. And so, you know, a lot of people will say to that, well, we're still in the first inning, or we're still early. You know, there is a part of me that actually kind of thinks that, you know, the development of these ecosystems has been, and adoption of these technologies has been, it's probably not as rapid as what I would have expected. There's definitely a lot of charts out there that'll show you kind of the early stage of the internet and user adoption, and then early days of crypto adoption. And it's kind of, you know, one chart's later over the next, and they sort of look like they're tracking to the same.
Yeah.
But I think that chart's kind of BS, you know, because it's actually looking, it's not really looking at daily active users, it's looking at wallets. And so I think the number is actually lower. I think adoption in crypto is slower than the early internet. And I don't know why that is. It could be that, you know, a lot of these teams, it could be that it is a gold rush right now. So a lot of people are just coming in, trying to get something out, make their money, and then disappear. And so that's not really injecting a lot of utility into the ecosystem. That's something that I'm very concerned about. It could be that a lot of these teams are just very distracted, you know, because the difference between the early internet and now, I mean, there's definitely a lot of similarity. But one of the big differences is that, you know, in participating in a crypto project, your ownership as a team member via token is almost immediately liquid. Yeah. And so you've got that market distracting you with the number moving
you can
up,
always sell.
Moving down.
Yeah, you always have the option to sell, which was not
always
the case,
have the option to sell
in the 90s at all. Right.
Whereas in the 90s, yeah, I mean, actually people were IPOing a lot earlier than where they are today, but there was a couple of years before you get the opportunity to be liquid. And so you're sort of striving to get to that IPO stage, you IPO, and then, you know, maybe at some point you get some liquidity after that. With these teams now, it's almost immediate liquidity. And then, you know, a lot of these folks make a lot of money, and then and do it within a few months, and then just like, what do I have to keep working? Yeah. And so I think that's slowed down a lot of progress in this space, and you know, I think that's to the detriment of all of this. So I don't know how to solve that. I mean, I think markets are obviously really important for crypto, right? These ecosystems only survive because there's a liquid token out there that provides incentives, not just for developers, but for validators, miners, whoever is securing these networks. You need to have that. So trying to get that balance right between incentivizing the teams to really push and innovate and stick with these projects for the long term, and also providing that mechanic, that kind of oxygen that breathes energy into these organic entities, these protocols. Getting that balance right, that's tough. We've still got to work that out.
Yeah, it's a tokenomics balancing act. Like, there's no reason that VCs should get 25% of their coins on launch, right? There's also no reason to wait 10 years. So, you know, maybe 1% up front and vesting daily as opposed to in chunks over 5 years. You know, there is a reasonable balance there and a way to do it. But to your point, a lot of them, you know, to incentivize the money to come in, said you'll get 50% of your liquidity in the first 3 months, right? And it's it would be very hard for a VC, especially if they're, you know, managing other people's money in some way, not to take that 100x when they can get it. right? But like you said, then the challenge is how do you keep them participating 4 years later?
Yeah, it's a challenge. Yeah, on the VC end, something that we're very sensitive to is that if a team is launching or running a sale on CoinList, something that we look at pretty closely is when was the last VC round and what were the terms on that round? Because what we don't want, we definitely are trying to avoid is a situation where because VCs are aware that a project may be launching on CoinList, and we've got a pretty nice track record in terms of post-sale valuations, and so with some nice multiples there. So what we don't want to be is in a situation where these investors are jumping in at a VC round, say 6 months before a CoinList sale, specifically because they know they're going to get their 10 to 20 to 50x on post-sale. And then immediately get there like 25%. So having that, something that we definitely want to try to avoid and try best to avoid is acting as somebody that's like propping up these deals for VCs. The thing that we're really trying to drive to do is help these teams connect with a broad community of high value token holders, so that when they launch at mainnet, you've got 10, 20, 50,000 rabid tribalistic token holders who are out there really championing what it is you're doing and believe in it genuinely. And what we're not here to do is like prop up VC deals.
Yeah, it's a big challenge. So obviously now we've talked about the way that a lot of these projects come to market, the way they're funded and people can get access. But one of the most exciting conversations I want to have is what's coming for 2022, right? For you guys specifically, but also just general trends. I read your amazing report you guys had, the 5 crypto trends 2022. Correct me if I'm wrong. Most in-demand category for 2022 is gaming. Ethereum is not the only party worth attending. Bitcoin stays king. No flippening. Cornucopia of distribution strategies. Obviously, we kind of just touched on that. And decentralized software will eat software. Do you mind if we go through those kind of one by one and talk about them? Most in-demand category for 2022, gaming.
Yeah, let's go. Yeah, so gaming is, and actually you can kind of see what's going on in gaming if you just take a look at, say, DappRadar or any other site that lists like daily active user numbers, and the vast majority of, say, the top 10, I think it's maybe like 8 out of the top 10 on DappRadar's ranking list are games. And we're not at sort of the hundreds of millions of daily active user numbers yet, but it's definitely pretty impressive. So you got some teams that have got 500,000 daily active users, and so there's definitely a lot of activity around gaming from a user engagement standpoint, which we're definitely excited about. And what's great about that is that I think that starts to solve a lot of the user experience issues that folks have in engaging with crypto. Crypto is not the most, if you want to engage with a dApp or if you want to do DeFi or whatever, you've got to get your on-ramp in either via Coinbase or else with somebody else. And then you've got to kind of wrap that token, or maybe you buy ETH or whatever. You got to move it into a non-custodial wallet, and you got to set up a non-custodial wallet. You've got to make sure you keep your private key somewhere. And so there's like 20 steps that have to go through before you can make a bet or do anything in crypto, and really shitty user experience. So I think what gaming does is it creates that opportunity for user experience to improve. I mean, games die if UX is bad. And so it really is kind of a great forcing function to start to improve user experience with a lot of these teams. I've got one of my kids playing Axie, and so it's the fact that he can do it is it's kind of an indication that user experience improvements are happening in gaming, and hopefully that ends up starting to filter across to other verticals in crypto. So that's one thing that we're really excited about.
The future of cryptocurrency is a multi-chain world, and you can't have a multi-chain world without Horizen, who allows these chains to be interoperable. Horizen is the zero-knowledge enabled network of blockchains powered by the largest node system larger than either Bitcoin or Ethereum, with scalability and flexibility unmatched by others. Blockchains built on Horizen are enhanced by ZK Snark privacy tech and provide massive throughput without compromising decentralization. Horizen can support up to 10,000 independent blockchains running in parallel and issue an unlimited amount of tokens. That's why huge projects that you love, like Celsius, Dash, IOTA, GameStation, Hero Engine, and LTO Network, are all building their blockchains with Horizen. Anyone can build on Horizen using their platform Zendu, and Horizen is going to issue their own first token on Zendu this year, Zenny Token. If you're not familiar with all the amazing things that this project is doing, check them out at thewolfofallstreets.link/Horizen. That's HORIZEN. Do it now. If you're looking for a place to invest in crypto and to trade with and without leverage, earn yield, all backed by institutional grade security, then look no further than Whalefin. Whalefin is a new product powered by Amber Group. It combines the institutional grade features of the Amber Pro and the intuitive user interface and features of the Amber app. As we enter the metaverse, individual wealth is being built and managed in totally new ways. Whalefin is an all-in-one digital asset platform serving as the gateway to the metaverse and your secure digital wealth partner. Guys, Whalefin combines the world's best investing technology with valuable investment research. It provides the best prices from 100+ exchanges and venues, all, as I said, with institutional backing and institutional grade security. If you're looking for more information and the perfect platform for trading and investing, then please go to www.thewolfofallstreets.link/Whalefin. That's /WHALEFIN. Check them out now. I have to ask you though, did he also open the MetaMask wallet, transfer ETH in, open the Ronin wallet, transfer ETH there before actually playing the game? Because the game can have good UX UI. The game can have good UX UI, but getting to it is very difficult.
Yes, I have to admit, I nudged him along a little bit.
Yeah.
So
I'm just kidding. Really, it's a very difficult process.
Go ahead and make daddy some money now.
Right. Yeah.
Yeah, no, there's still a ton of challenges there. But anyway, so I think that's kind of one thing that we're excited about is just improvements to UX. The other thing that's interesting about gaming and is kind of a nuance with gaming is that, which I think is also awesome, and we're definitely going to see this more going into this year, into next year, is that we're not really just talking about games. Obviously, we're talking about gaming platforms. And one of our issuers that we worked with recently, Immutable, they're the makers of Gods Unchained, Guild of Guardians, a bunch of other games. So their games are great, but they've also architected their ecosystem in a way that it operates as an ecosystem. So you've got Immutable X as its ecosystem, as its Ethereum layer 2, and it has its own marketplace. It's a platform where other gamers could potentially develop games on, and they have their own wallet. So it's really just not purely about games themselves, but also all of the infrastructure around that, including financial infrastructure. And one of the things I've been saying to people is that it's a lot like Steam by Valve Corporation. It's what these teams are building it's like they're building Steam, but Steam at a much more powerful level, and Steam on steroids. And so, Sky Mavis has done the same with Ronin, as you said. So Ronin, not just the wallet, it's really that L2. So it's really kind of proving out in a lot of ways. There's great things about the fact that it's not just about games, but it's really about building gaming ecosystems. That's something that's really cool. The other thing that's really cool too is that these ecosystems, these gaming platforms are proving out Ethereum in particular, Ethereum's scaling model, where you have, because there's no way you can really build games on Ethereum layer 1 right now, just because gas fees are incredibly high, chain's kind of slow. And so what all these teams are doing is they're building their own layer 2, and then all of the transactions are playing out on the layer 2. You've got gas fee advantages. It's a lot cheaper to run transactions there. Transactions are faster, and that obviously also contributes to better UX. And then eventually they kind of settle those transactions on Ethereum layer 1. So you still have the advantage of security of the layer 1, but all the transactional activity is happening on the layer 2. And again, it's really kind of proving out one of the scaling models that the Ethereum teams mapped out. And that's something that we're really excited about. By the way, I mean, obviously it's not just happening on Ethereum. There's game ecosystems developing in Solana and other,
well, that was your next
other
one.
L1s too.
Ethereum is not the only party worth attending, and that speaks to that right there.
Yeah, absolutely. I think, and part of that story is around layer twos and moving away, just continuing to play within the Ethereum universe, but either doing that via side chains or doing it via layer twos. And so we're going to see much more of that happening. It's definitely happening right now. Related to that too is obviously a lot of the other L1s are out there: Solana, Avalanche, Algorand, Near, and we're definitely seeing a lot of developer activity in those ecosystems. We're seeing a lot of money get pushed into those ecosystems. That's encouraging more developers to move over. A lot of these platforms, a lot of these L1s are also developing Ethereum virtual machine compatibility. So a lot of the development activity that happened on Ethereum can be much more easily ported over to Solana or whatever other chain. And so I think that's just going to encourage more development away from Ethereum layer one. But yeah, it's definitely exciting. I mean, it's really hard to deny the power of the Ethereum ecosystem. There's so many developers there, and a lot of the tooling, a lot of the developer infrastructure has been developed around Ethereum, Solidity, et cetera. And so they've just done an amazing job. But I think, but yeah, there's a lot of advantages also to playing in these other ecosystems. Again, lots of capital there. And one other thing that may ultimately end up playing out here is that, maybe we just end up not caring what L1 you're playing on at all. And actually, from a user experience standpoint, you really shouldn't care, right? And it should just be about, you're either playing a game or you're trying to execute some kind of transaction, or you're playing in finance, whatever. And you shouldn't really care about whether you're on Ethereum or Solana or Avalanche or some other layer one, right? I mean, that should just be plumbing.
That's the forest through the trees, right? It's you don't think about how your phone works or how the internet works. You just use it. And that you talk about UX UI, you don't want down the road, you don't want people even thinking about it as blockchain or crypto. You just want to think it as their game, right? They just go play their game.
Yes. So, and I think one of the big developments that's going to help us get to that sort of multi-chain universe is that we are seeing quite a bit of like layer zero or interchain activity, like projects like in a blockchain protocol, IBC protocol that came out of the Cosmos team. There are other layer zero projects that are in our pipeline that we're looking at. And so those kinds of projects end up just being one additional step closer to this world where whatever chain you're operating on is just plumbing and you shouldn't think about it. These chains can interoperate, or users can interoperate, or assets can interoperate across these chains. And there's a lot of activity going on in that space. But by the way, I don't want to say that it's not cool to be talking about all these different L1s, and it's really interesting. I mean, anytime a new L1 comes out, like we're always like, hey, what are these guys? What's their new angle? What are they trying to do? So it's fun to geek out on what these L1s are doing. And I'm sure you do it. So it's all that stuff's fun. Yeah, right. Ad nauseum. But I think ultimately, these teams, these protocols, they're meant to try to solve use cases or entertain or what have you. And so, hopefully that ends up being the focus in the next year or two.
Right. The next one was Bitcoin stays king, no flippening, which I find interesting. I've been talking about this a lot because at the beginning of 2021, all we were talking about really was Bitcoin, right? I mean, DeFi was bubbling to some degree. We'd had sort of this DeFi summer of wild yield farming and rug pulls. But we were talking about MicroStrategy and Tesla, right? And what companies were going to invest in Bitcoin and what nation states were going to adopt Bitcoin. And then all the money really came in through VCs and all the things we just described, right? The money did not come into crypto through Bitcoin largely last year. Some did, but people want to invest in all of these protocols and the technological side. But you say Bitcoin stays king, no flippening. So maybe that narrative is going to change back.
I don't think so. No, I think Bitcoin, Bitcoin stays king. And part of the reason why I think that is because, and part of what the data suggests is that a lot of the capital that's coming in is actually folks who are Bitcoin wealthy, and they're selling off a small portion of their Bitcoin to make some additional bets to try to find the next Bitcoin, or find the next Ethereum, or find the next Solana, and a lot of that money ends up coming back to Bitcoin after it's made. So that's kind of one big thing that we see. The other is that we do see a lot of kind of cross-chain or interoperable variants of Bitcoin. I'm sure you're familiar with Wrap Bitcoin. So that was something that really came on big in the last year and a half or so. Partnering with the BitGo team early on to help with some of the retail distribution of that, and we did about $6 billion in conversions in 2021 of Wrap Bitcoin. And there's just a massive hunger amongst the Bitcoin wealthy to take their Bitcoin and put it to work on other protocols. And these folks don't want to let go of their Bitcoin, so they want to hang on to their Bitcoin but earn some yields via WBTC, WETH liquidity pools, or what have you. So there's we're definitely seeing a lot of resistance to selling off Bitcoin en masse and going into 1, 2, 3 other ecosystems. But and Wrap Bitcoin, there's a bunch of other variants of tokenized Bitcoin out there. But we definitely saw a lot of activity around those kinds of conversions. And I think people don't want to let go of their Bitcoin.
Perfect sense.
And why would they? It's the most secure network, right? Like it's been proven over the last 10 years. It's
somebody, it was CNBC or something, asked Sam Bankman-Fried maybe a week ago, like, what 3 chains or projects are you most excited about? And he said, I think Solana, Avalanche, and then he copped out and said, wrapping everything, right? And so, I think you would agree, right? And I never really thought about the fact that so much of this money that's flowing in is early Bitcoin adopters who, understand it and are willing to make that next bet. That's a really, really good point, and not something that I had considered. The next one was a cornucopia of token distribution strategies.
Yeah. We saw a crazy increase over the last year in terms of different ways that people run, whether it's token sales or airdrops. And, I think, airdrops kind of had their moment in 2018, but then they came back with a vengeance. And, I think it's something that these teams are really hungry for, is like, how do I get large communities of people holding my token when I launch? I want to make sure that there are people out on social media, people in the markets that understand what we're trying to do, believe in what we're trying to do, and are ensuring that our asset has value, because that's going to attract more people to it. That's going to attract great validators, miners, what have you, developers. And so it's just super critical for these teams to build their communities, even more so than raising capital. And we talked about this at the outset. It's hearing A16Z raising a $4 billion fund, and just thinking about how teams are thinking about how they engage with an A16Z. I think it's just going to be increasingly difficult to deploy that capital. I'm sure A16Z and others are going to be able to do it, but I think it's going to be increasingly difficult because you can get that capital anywhere, and you don't have to sell the farm to a large VC. You don't even have to sell to a VC at all.
Any VC, VC, right?
You can't just go directly into the market because there is so much liquidity in the long tail crypto markets that you could very easily raise $100 million and at the same time engage.
Do it on Twitter.
Yeah, right.
It's crazy, but you really could. What I find so funny, I haven't had the airdrop conversation here at all, and I know that it's much more nuanced and deep than this. You just talked about why airdrops are so powerful, but I still find it very funny that our community rails so hard against money printing, but love airdrops. Government free money is bad, but our free money when it goes in my pocket.
That's
is
it.
perfect.
That's right. Well, we're different. We're different. It's decentralized. So
yeah, decentralized money printing. Yes,
decentralized. Right. That one's okay. Yeah. Well, I think airdrops are definitely. I think what's different now about the way that a lot of teams are approaching airdrops is that they are being much more selective in terms of who they target. There was back in 2017, it was pretty indiscriminate. Like a lot of teams would just drop in every Ethereum wallet they could find. They drop their token. And now it's different. Now it's a little bit more like, okay, well, what kind of user, what sort of brand do we have? What kind of user do we want to attract? Are there DAOs that we may want to target? Let's go target this DAO and drop to them. And so it's much more nuanced. It's a lot more intelligent now. And I think that is going to increase. I mean, where a lot of the teams that are talking to us have got, maybe it's not super sophisticated approach to marketing and targeting, but it's certainly way more sophisticated than what it was even a year and a half ago, where teams are very specific about what they want, very specific about the kinds of users they want holding their token, and we can help them find those people.
Yeah, I mean, it makes a lot of sense. Obviously, like Looks token, whatever. If you're doing an massive NFT platform, to airdrop your coins to everyone who uses OpenSea, right? I mean, that it makes sense. Still, kind of some irony in it, but the strategy makes a ton of sense. And then the final one was decentralized software will eat software.
Yeah, so it's over the last 30 years, there's been incredible development, obviously, across all kinds of verticals through the internet age, whether it's search, e-commerce, social, finance, even. And what we're seeing is that there's a lot of teams out there that are trying to tackle the same verticals. And for the last year and a half, finance has been a clear vertical that has been attacked by decentralized technologies. And gaming is now being attacked. Collectibles, I don't know if that was a vertical, but I guess in crypto it is. And then a lot of teams that we've worked with have tackled some of these others, including social, including e-commerce, including search. And so we're definitely seeing more and more teams looking at, okay, what are the use cases that was solved by Web 2 or Web 1, and is there a decentralized solution that makes more sense? And we're just seeing more and more of that. And then I think ultimately, even just by definition, these protocols, these systems have the potential to run indefinitely. At some point, a centralized company will cease operations. And it might be hard to believe that now, thinking about sort of the Amazons and Googles of the world. But I went through the first Blockbuster. Yeah, there you go. Yeah, Sears. I went through the first internet bubble, and I was working at an internet agency in kind of late 90s, early 2000s. And, we supported so many .coms, and zero still exists. Maybe that's a commentary on how successful we were in supporting them, or maybe it was just because I don't know. It was just a phase, right? There was just a million different ideas, big gold rush, a lot of teams putting their stuff out there, and eventually, they stopped operations. And there is greater potential in crypto for these ecosystems to run indefinitely, and by definition, that has the opportunity to supplant a lot of these centralized platforms over time. But I don't think there's going to be a complete devouring of software by decentralized software. But I think at the very least, it just provides a very powerful alternative, a really attractive alternative, and one that increasingly, hopefully, more and more people adopt.
I mean, the world now, it's not a knock against decentralization or what's been built, but a lot of centralized systems just work better than decentralized systems right now. The Visa network is a much better payment network than any of our blockchains, right?
Absolutely, for sure. Yes. Yeah, I think that's totally true. I think also, some existing centralized solutions, while they work great for the vast majority of people, they also don't work great for some. And a good example might be search. And if you live in China, then Google isn't that great. There's a lot of censorship that's gone on in Google search results in that jurisdiction. And so, you may want to have a solution that isn't subject to centralized government or centralized entity censorship. And so in those cases, there may be a better decentralized solution. So yeah, centralized services, for the vast majority of them, they just work fantastic, but not for everybody.
I know we sort of made the classic joke earlier. Maybe we're just in the first inning. Maybe we're very early. I mean, we talk about all this stuff that's still coming in 2022, all of these platforms trying to launch. I mean, is your feeling that this continues sort of indefinitely, as you said, and that we just continue to grow with time? Or do you think we get a bubble and see sort of a few companies rise from the ashes, like the .com bubble, right? I mean, people love to kind of poo-poo the .com bubble, but it's how you get Google and Amazon, right? And so,
yeah,
we have 1,000 winners, or is this just all a process to find the next round of biggest companies in the world that are Web3?
Yeah, that's a good point, and I do think that there's opportunity for some correction in the industry, for sure. But yeah, I mean, in terms of what we're seeing though, there are so many different types of either applications or platforms or infrastructure efforts to try to make these decentralized technologies work better for people. We're not seeing, at least in terms of the projects that meet our quality bar, we're not seeing a slowdown. We're seeing an acceleration. There's just more and more teams, high quality, better capitalized, very legit, serious teams really trying to push forward this ecosystem. And that's really what we're excited about. That's what we focus on. And so, yeah, I think there's an opportunity for some segment of the ecosystem to go through some kind of bubble, and that'll have ripple effects to everybody in the industry. But definitely the folks that are serious about what they're doing, there's definitely going to be some really big winners there, and we're going to keep seeing those teams come out of the woodwork and reach out to us.
I love that we can see these smaller bubbles now that don't implode the entire industry though, right? I mean, we sort of we had a little DeFi bubble, a bit of an NFT bubble, and and everything doesn't have to crash it all together. I think that's showing that there's potentially some maturity in the market, and that maybe some of these things can stand out on their own without just being affected dramatically by a market-wide move or a China ban or a Bitcoin correction, right?
Yeah, we're popping one bubble at a time, but
that's good.
Yeah, I think it's cool for the industry, and I mean, I think the thing that I'm kind of more excited about as well is just seeing a level of maturity in the industry, so that we don't have, and I can't imagine this completely going away, but we don't have as much kind of irrational tribalism around each of these protocols that we do now, because I think that definitely does slow down. Yeah, it's to the detriment of the industry, where you've got a lot of people, whether it's on crypto Twitter or elsewhere, propping up their thing, shilling their thing, and poo-pooing other protocols, and that sort of irrational tribalism. Even though we can kind of sit back and say, hey, we rise above that, or we don't have to listen to that noise. There's a lot of people who are coming into the industry or coming into crypto who see that and start to believe some of that, or are turned off. Right. Exactly. Yeah. And so a lot of that is maybe that helps accelerate some bubbles popping, but at the same time, it also slows down progress more generally. So, in talking about the industry maturing, I think that's still a big piece of maturing that we haven't got to yet.
I agree. We're way too small. We're way too small as an industry to not sort of cheer each other on and work together. Right. It's just no project is big enough to dominate at that level where you can be a maximalist about it, in my opinion. But
no, I'm 100% with you. I mean, obviously the reality is that this is an internet technology. It grew up on the internet, and the internet has its bizarreness, its trolls, its tribalistic activity,
dark corners.
Yeah, so all that comes along with it, and some of that's really fun. But I think I think net, it's probably slowed things down, and yeah, hopefully we can get over it.
Awesome. Where can everybody follow you after this and start to participate in CoinList and the Karma program and try to get access to some of these projects?
CoinList.co. That's home for us. So sign up at CoinList.co. We also are on Twitter. So CoinList on Twitter. And I'm Graham Jenkin on Twitter as well. But CoinList.co is the best place to go.
Most important question. How often do people call you Jenkins?
My dad used to say Jenkin dollar because he always used to put Jenkin and somebody would put S on the end and he put a strike through it.
I like it. So it just seems Jenkin like the natural mental jump would be from Jenkin to Jenkins. I don't know. It's assumption.
Yes. Jenkin dollar, Jenkins, whatever you prefer.
For now on, I'm calling you Graham Jenkin dollar. So thank you so much for taking the time. I really do appreciate it. Gave some great insight into what's likely coming in the future. And so we'll be following along. We'll have to have this conversation again down the road to see if we were right.
Thanks, Scott. Appreciate your time. Great conversation. And thanks for everything you do.